One of the media inaccuracies currently in a few places relates to a post by Mark Cuban about another tech bubble. And one of the things you'll see is, if you look at it, is people will be posting images or quotes from the Nasdaq, and they'll say he's talking about another tech bubble. And it's kind of interesting because what he's actually talking about is the private tech bubble, which is not the Nasdaq. Now, the Nasdaq may be affected based on what happens as people start to lose money in the private market, but that's a totally different thing. That's not what he's actually referring to. So I wanted to quote this from his blog, because I kept seeing the Nasdaq chart and I was like, this is not what he's talking about. He says, to the investor, it's the hope of a huge payout, but there's one critical difference. Back then, in 2000, the companies the general public was investing in were public companies. They may have been horrible companies, but being public meant that investors had liquidity to sell their stocks. The bubble today comes from private investors who are investing in apps and small tech companies. He goes on to talk about equity crowdfunding, where people are putting in money such as $5,000 and trying to generate a return. So this isn't directly, he's not directly referring to the Nasdaq. Now, that does not mean that the Nasdaq in the long run isn't going to be affected if people start to lose money in other areas. But the thing is like, that's not directly what he's referring to. So anybody who keeps putting charts of the Nasdaq up to refer to what he's talking about, they're not paying attention, because that's not what he's talking about. There are a couple of things that I'll say really fast about this, and that is, if people invest in companies like maps applications or tech companies that really aren't doing anything, they're going to face trouble anyway. And that's true with Nasdaq companies as well. It doesn't, you know, if you're investing money in companies that aren't going to create wealth or are not creating products that people will need in the future, you're always going to face those problems. If you are investing in companies that people are going to need, like for instance, a tech solution to water problems, or a tech solution to healthcare problems, or like LEO Motors, for instance, you're solving the problem of increasing the output of oil, or Tesla Motors. Those companies are creating wealth in the sense that we'll be able to use what they're creating to increase our output, increase our productivity. But any application, and there are a lot of apps out there that are just ginormous wastes of time. If you invest money in that, then yeah, you'll lose. So I'm not familiar with this private equity market in general, but if somebody goes and they drop $5,000 into something that is, they're just like a life coach business, really. Those people don't need investors. They're just trying to retire very quickly. That's exactly what they're trying to do. So they create an idea to try to get money, and then they just retire and go bankrupt, and ta-da, there you go. After having said that, look, I mean, people are going to do stupid stuff with their money. So, but that being said, this is not referring to the Nasdaq. He's not talking about that. Although I think that there is a tech bubble in the Nasdaq. That's completely different. He is specifically talking about a private tech bubble. So this wouldn't affect, in his mind, investors in the Nasdaq. Not the same thing.